What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig. We're going to be talking about the charts, so we're definitely going to be talking about Bitcoin, so make sure you stick around for the whole video. We're going to go through some other charts first. They're very old charts that we've been watching for a long time. As you guys know, I do think a huge bear market is coming if it hasn't already started. Although we could go higher, and I'm going to take a look at the bullish case for Bitcoin along with the bearish case. We're going to take a look at the bearish case first, then I'm going to show you what happens and what my targets are if it remains bullish. So definitely stick around for the whole video if that sounds good to you. Make sure you smash that thumbs up and subscribe to the channel if you haven't already. Leave your comments down below. I'm curious. To those of you that think the bear market has begun, hit 1. For those of you that believe we have a lot more bull to go in this market and they're going to continue to pump these markets, hit 2. As you guys know, if you look around in the real economy, such as the housing markets, how much money people have, and the debt ratio right now is insane. So there's a lot of people not paying their bills, not paying their debts right now. And what does that lead to? That leads to very bad things. I know you're seeing the economic numbers, they're still trying to flaunt it as good. I don't believe in these numbers that they give us. They're skewed. They're a huge misconception in my view of the markets, right? Because when you turn around and look at the real economy, what's really going on, how are people surviving, how much money do people have in their banks, things like that, that shows the economy is not doing good, and that's the real economy in my opinion. But let's look at the market, see what's going on. As you guys know, this is my oil chart here. We got our bounce way back here at our 62.70 that I had expected once we broke here. I do believe we are eventually going to break this, and I still have targets as low as 26 to 35 for oil. Yeah, that sounds crazy. I hear you, but if you guys were around for this, it went to negative 40. I don't know if you guys remember that, but these markets are, in my opinion, designed to take the little guy's money, right? They get everybody all hyped up in the markets, like as in right now, everybody's super bullish on everything. Again, not to say it can't go higher, but I don't think it's going to last long at all. And I think the huge opportunity, the biggest opportunity of our lifetimes is coming, and that's in a crash, right? A crash in the market is not doom and gloom if it's played right. It can be the biggest opportunity in a lifetime. We'll talk about that here in a minute. But let's go on to the next chart right here. This is the DXY. If we zoom out a little bit, you can see each one of these wedges in the DXY, once it broke, hit a huge run up. And same thing I think is going to happen here. We came back down for retest, came back down again, just like we did here. I do see this as major bullish. As you guys know, I have a target of 109 to 110 right here, which would be the top of this rising channel. I believe we get up to at least that. If we do come back down and break down from there, then things could get ugly for the dollar. I know a lot of people are thinking the dollar is going away. Eventually, I think that will happen, but I don't think it's going to be within the next couple of years for sure. So, but anyways, I do have targets as high as 114 and much higher than that if things get really crazy, right? Let's take a look at the 10-year yield. As you guys know, I'm looking for this 533 range. I do expect some rejection there. If that is the top, we go down from there. But if we break that, I'm looking for around 7%. And as you guys know, if you've been watching my videos, I've been talking about for a long time, I don't think this market is really going to see a real bottom until interest rates on U.S. mortgages are above 10%, possibly deep into the double digits, but we'll see what happens there. That's my view. Doesn't have to be yours. None of this is financial advice. Here's another look at the DXY just in the daily chart. This is still what I'm looking for, this 109 range eventually here. And let's take a look at silver. So silver, we could be in a wedge right here, and if we are, and we've topped out on silver, I'm looking for a break of this 0.382 Fibonacci retracement from this low to this high, depending on if, when, and where it hits this bottom. But it could get us very low, like sub 10 bucks. Believe it or not, if you guys remember, if you guys were around back here, Silver was really low, and I know there are a lot of silver bulls out there calling for, new all-time highs coming. But if you were around for, watching the markets in 2011 when it got up to 50, you can see what happened after that. Just like any other bubble, you get a high, then you never get an well, I can't say never, but usually when a bubble bursts, you get bounce backs and then continuation of the downside. Now, gold, I do believe has finished a one wave count. If it hasn't finished, obviously it could go a little bit higher before coming down. But I am looking for a huge correction in gold. Again, not doom and gloom. Huge opportunity if this does happen down to these 950 levels, which last time we were down at 950 levels was in '09, which would be a support zone, right? Because that was a resistance when it popped up there. So something to be cautious about. As you guys know, I do think the Dow is close to, if not topped. It does, if you look at this pattern here, this is the Great Depression, 1929 over here, right? We had our high, our low, our higher high, our lower low, huge bull market, just like we had over here in the Great Depression. And what happened after that? Nobody expected, nobody would have believed if you told them a week ahead of time that it was going to go to these levels, kind of like right now. So just something to be cautious. I like to show you guys the downside of the markets because most of the videos you watch, all you're going to see is upside targets, bull market forever. They're going to continue pumping for the election. You're going to hear a lot of that stuff, right? So if they get everyone to believe in getting into the markets because they're going to continue to go up, right? That's a great way for them to take the money out. Remember, you can have a 401k that is up in the millions right now, and a year from now, it could be down in, much, much less. It could do an 80% drop. So something to be careful about. I know a lot of people think they've gotten rich because they got a lot of money in the markets. That money can disappear real quick. The real winners are the ones that sell the top and take the cash out, right? And then buying the bottom. You can see back here after the Great Depression, it was a long time before it returned to those highs. But if you bought in anywhere down in these low areas, you made money for a long, long time, and a lot of it. That's what I'm talking about with the hugest opportunity of a lifetime. If this does happen, the opportunity is going to be amazing. I am still looking for this. I do believe we're going to see this in the near future. Near future, not meaning tomorrow, but I do think this is going to come down in a big way with a lot of opportunity there, guys. If you guys are interested in trading before we get into Bitcoin, there's a link down below to Prime XBT. By far my favorite exchange. They don't trade against you like a lot of the scammy crypto exchanges. You can also trade Forex, gold, silver, oil, S&P, Dow Jones, everything, all from one exchange. By using my link down below, you can get up to a $7,000 deposit bonus. Also, 25% off your trading fees. Check it out. So this is my short zone that we put in way back here. I put a tweet. It was, I don't know, in May, the middle of May, somewhere around there. Once we broke here, told you to watch this area for a short zone in between 69, 196, 71, 5. I think my tweet was like 71, 8, but either way, we're still in that short zone, guys. If we get out of this and start opening and closing dailies above this high over here at the, let's say 72,000, if we break above there and hold and open and close a daily, then we could look at the bullish case, which I'm going to show you here in a minute. But as of right now, if this holds as our short zone, we break back down below this, my targets still remain the same, 57.6. And again, guys, this doesn't mean it goes straight down, right? We're going to have lots of bouncing in here, right? But this would be one bounce area I'll be watching for, that 57.6 area, maybe bounce all the way back up to 67 and then continue down, but we'll see how that goes. I will keep you updated on the charts. I haven't done videos the last few days. Obviously, we're just ranging in this zone right now, but again, I believe this is a good place to short. Obviously, put your stops up above the high here. I do believe this whole big thing is going to be a 5 wave count, but this 1, 2, 3, 4, 5 is just the third wave, right, of a 5-wave countdown, which I see ending somewhere around 45.5 to 41.6, right? And then I expect another bounce up there for wave 4, and then continue down to our wave 5 somewhere around maybe 34,000. There is a lot of liquidation area here for the longs, right, in the markets. So if this does get broken, it will be a massive drop from there. This could take months and months to get to these levels, but if we do get there and break, I think it could be very ugly. As you guys know, here on the left is the Amazon.com bubble, our 3 highs, right? We had a triple top within this same type pattern formed here in Bitcoin. This is what it would look like if this was the top here, right? If this was the top, we could see this was a 94% correction. If Bitcoin went that low to the 94% correction, would be around the 35 to 4,500 range. I still think that is a very good possibility. Not saying it has to happen, but I want you guys to be cautious, because this could definitely happen. And if it does, and you've been buying up here, it's going to hurt. Just be careful, guys. If you think it's going to continue up, here is your bullish case. And it's not as bullish as a lot of people are talking about, in my opinion, right? So this is what it would look like if we did get our distribution schematic number 1 off the Wyckoff method, right? We would get another high up here. We drew this out quite some time ago, right? If we do break this high over here at the 73.8 range, then your next, again, this is the bullish case saying we haven't topped out yet. I just showed you what I believe will happen if we have topped out, which I think is a good possibility. But if we haven't, this could get us up somewhere in that 77, 78 range, have a huge retracement back down and back up to, 78 to 80 range before our big fall. So there is a possibility of these highs. And then there's schematic number 2. Here, let me put schematic number 1 up there so you can see what I'm going off of, right? Right here. You can see the similarities, right? If it was to play out like this. Now let's take a look at schematic number 2. That shows only one more high, and that's that 76 to 78 range. If we do continue higher, this would be the next area to short, because in both schematics, you get a nice dump. So this one would be probably 78,000 all the way down to 60 to 62,000 range before our next bounce up. So either way, there's a great trade in there if the Wyckoff method is playing out, right? Either way, even if you do this one, this would be the last high if it's schematic number 2, which let me pull that up and show you what that looks like right here, right? So these are things I want you to be cautious about. Keep an eye on. Anyone that's doing any trading, I hope you're doing awesome. Just remember risk management, guys. Never risk more than you're willing to lose, and risk a little to gain a lot, right? Don't be afraid to accept losses, small losses, before they get big if you are trading. So anyways, thanks for watching. Love you guys. See you in the next one.